Alrighty, everyone. I hope everyone had a great Labor Day weekend, and I am back this week with a new S&P 500 roadmap. And honestly, this week's action, it's really simple because I'm focusing on two key levels that I think will dictate the sentiment and the overall trend for the S&P 500 heading into this week. So my first level of interest this week is going to be 4,500. Okay, so consider that the Liz this week, or the line in the sand for buyers. Okay, they have to hold, they have to defend the 4,500 level in order to basically stay in control of the dominant trend. Okay, and this is the only chart setup that I'm going to be focusing on this week because it's going to show everything that I want to talk about. Okay, so notice on Friday of last week, price didn't even test 4,500. Okay, I really thought that was we were going to see a test of 4,500 on Friday following NFP. We didn't. Okay, price or buyers ended up defending 45.10 really, really well. However, I'm going to tweak my Liz. I'm going to lower my Liz a little bit to 4,500. And the other key level that I want to focus on this week, so real quick, I'm going to type it out so it can be visualized on the chart. So 4,500 Liz. All right, we're going to put it right there. So the other key level of interest that I want to talk about this week is going to be 45.60. All right, so just above last week's high, which is going to be right up here, 45.60. I'm going to go over this level in a minute. So why do I have 4,500 as my Liz? Okay, so we know buyers are defending this key level, but if we look at last week's volume profile, a lot of the action, 70% of the action was spent above 4,500. Okay, very little acceptance above 45.40, which is going to be noted this week. However, most of the action was spent in pretty much about a 38 point or a 40 point range when you look at 4,500, just a little bit below it, and then of course up to 45.40. Okay, this does have the possibility of being distribution. And a quick side note here, we do have a broadening wedge pattern that is worth noting for ES, so I will cover that a little bit later. This does have the markings a little bit of distribution, and it will be confirmed as distribution if we see acceptance below 4,500. So why do I say 4,500 is a Liz? Because there's no going back once this support wall breaks. Notice this black box right here. It is a very large volume gap that price formed last week on Tuesday. Okay, so when we saw this sharp rally on Tuesday, it creates poor structure. Okay, it means there's no, essentially, price did not build before the big move. And so when you get a vertical move like this, it leaves no structure, no HVNs, no value areas for price to potentially use as support. So this volume gap is essentially going to let price glide right through it, or in this case, price will sell off right through this volume gap down to 44.50. So we're looking at around a 40 to 50 point drop once the 4,500 Liz does break. Okay, now where is price going to go if the 4,500 Liz does break? My overall target to the downside is just under 44.50. That is a good level, especially if you're swinging shorts. That's a good place to lock in profit. However, I am more interested in seeing the 44.46 level print. We can see where it acted as resistance, and it confirmed. And later we saw a false breakout, and then boom, finally the level broke, and that's when price surged higher. Okay, so I do think we will end up seeing 44.46 print if we do see 4,500 break. But a good overall level to the downside, especially if you're going to swing shorts on a break of 4,500, is 44.50, right? You're only playing with a few points there. In the case of SPY, you're only playing with a few dollars. So again, if you're going to catch a 50-point sell-off, you're looking at a $5 drop in the SPY. So you're only looking at a few cents when I talk about 44.46. So it's not that big of a deal for my SPY options traders. Definitely look to lock in profit around 44.50 if we do get that sell move lower. Okay. Now, I really want to clarify this. If and when we do get this volume gap right here filled to the downside, once price comes into 44.50, it does not make sense to open new short positions. Can the market keep moving lower? Yes, absolutely. Is it a high probability trade after selling off 50 points? No, not at all. You can see there was a lot of price consolidated around these lower levels around 442. We have a point of control right at 4,400. So there's going to be a lot of stronger support down here under 4,450. So the short trade is literally just this 50-point volume gap right here. And this is shown by my black box. Okay, so you either catch this short trade or you don't. Do not be one of those traders to short the lows right here. You do not want to do that at all this week. Okay, because in fact, I honestly can see price maybe trading off a little, or excuse me, selling off, and we're going to stagnate and consolidate right around here, and then we're going to bounce right back higher. Okay, that is definitely a complete possibility. I definitely would not rule that out, especially if we break 4,500 early on this week. A rally into the close, potentially for Friday, is definitely in the realm of possibility. So do not be one of those traders that short the lows around 4,450. Okay, so now I want to talk about the upside. 4,560 is my key level of interest to the upside. Excuse me, this week. I anticipate, so long as 4,500 does not break, I anticipate price to eventually test 4,560 this week. We've only got 4 days this week. It's going to be a shortened week. However, I do think we can see a test of that level this week. When that test does come, why is the 4,560 level so important? It is where another volume gap begins right here. Okay, poor structure was created during a sell-off at the beginning of August. There is a volume gap shown right here. Sellers want to defend this level with everything they've got. We saw one defense prior right here back on August 4th. Okay, so just over a month ago. We saw defense of this area before. On the first test of 4,560, I anticipate sellers to reemerge again and to defend that level. However, I do think it will be bought. So if for a hypothetical path that we're going to look at, we're going to see price test 4,560. Look for this dip to be bought around the 4,540 area, okay, because we can see right here, old resistance right here. Wait and see if we get a breakout above if the 4,540 area turns into new support. If that does happen, we will see some consolidation probably before an eventual move higher, and that should invalidate the sellers at 4,560. Buyers will take them out, and price will fill the volume gap. Okay, now, just like I said a few minutes ago, you either catch this long trade or you don't. Do not be one of the people that add new long positions at 4,590 near 4,600. 4,600, it's a key psych level. We saw distribution at this level before, over a month ago when price was last trading here. Okay, do not be one of the people that buy at a swing high. Okay, once this volume gap is filled around 4,590 to 4,593, the magnet for sellers, or excuse me, for buyers is gone. That means profit taking will, it's assumed that profit taking will occur, and that in turn will lead to price reversing lower. Okay, so do not be one of the people that buy the highs just under 4,600. Can the market keep squeezing or keep rallying past 4,600? Yes, absolutely. Is it a high probability trade? No, not at all. Okay, so just to briefly recap, my two key levels of interest this week are 4,500 and 4,560. Okay, there are two volume gaps that can be filled this week potentially. Now, the pain trade, in my opinion, this week is for price to trade in between these levels the entire week. So we're looking at a 60-point range. 60 points is a lot. Yes, we've seen days where price trades 60 points during RTH alone. However, that is not the norm. Okay, the pain trade is a lot of balancing action this week as smart money continues to build their positions for the very large directional move that is coming. Okay, however, I do think we will see one of these volume gaps filled personally this week. That is my personal opinion. Obviously, let price confirm. All right, so 4,500, 4,560 are my key levels for this week. I hope you guys enjoyed my breakdown. I hope you learned a thing or two from it and found value in it. And if you did find value, I would appreciate the like and subscribing to my new channel. And if you have any questions about anything I covered in this video, feel free to drop them in the comments below. I will happily answer.